I will start by sharing my screen so we can begin to have a feel of what we're going to be talking about today. Okay. Yeah, that's the screen right there. Last week or last 2 weeks, we started by talking about stocks trading. And we tried to introduce I tried to introduce us to what happens in the stock market. There are quite a lot of people in the market, but here in this platform, we are trying to learn how we can trade, not just investing, because a lot of people are used to investing. And many a times they come back with reports that are not too pleasant. Okay, they come with a report that maybe some of us are not so okay with such reports. But we have discovered that in the market, if you really want to get the best out of it, because of the way the market works, one must just engage in trading. Because from time to time, it goes up and it goes down. We call that volatility. Market rising, market going down. And some people just tell you that, oh, the market is not good because the prices are down. Meanwhile, some are happy because the market is down. Because when it goes down, that gives them opportunity to buy more. Then it goes up, they sell. Surprisingly, that fluctuation, the going up and going down, we never cease in the market. Just like day and night, we never cease in this world. So going up and going down, we never cease in the market. But those who are smart will always like to take advantage of those volatility, the movement, so that as it goes up, they will sell, it goes down, they buy. And from time to time, in 1 year, 2 years, you can, months, you can begin to take advantage of those movements. I'm going to be showing you some charts today. What lead to those upward movement and downward, we call it trend, upward trend and downward trend. What leads to that? We're going to be learning all about that today. Okay, some people were asking questions last week. How do I know when to buy? How do I know what to buy? Because in the market, really, we have in Nigerian stock market, we have about 144 companies that are listed in the main board of the exchange. That means you have quite a lot to decide on. But how do you know the one to buy? How do you know the one to sell? So in today's lesson, we are going to be introducing ourselves to knowing how do you pick stocks. Because that's where the issue is. We're not here to just get intelligence and just say, okay, I know this or I know that. What we are interested in is how we can make money. That's the truth. So we are here to talk about money. Just as you can see cash here, you can see euro, you can see 100, you can see 50, just as you can have on the screen. As you all know, my name is Augustine Ijel, and I live in Germany. By God's grace, I'm quite knowledgeable in the market, and I want to share the little I know with many of my friends who will be joining me today. We are talking about diversification. You and I have come to agree that in life, if one is going to be free, financially speaking, you must just get a way to diversify your income. Otherwise, getting income from one source, we always make one not to be free, financially speaking. I don't care how much you earn, and I don't care your profession. So long as you are under salary, so long as your pay is determined by a group of people or an individual, I tell you, you cannot be free financially. You cannot be free. So how now do we get free? There are many things people do to diversify their sources of income. But here in this platform, we want to learn how we can diversify our income through stock trading. At the beginning, I told us that as time goes on, we will delve into forex trading also. But for now, we are majoring on stock trading. Okay? How do you get yourself free, financially speaking? Let's look at some tips, which I think some of you may have known already. It's a common saying that people save to spend. But look, if you're going to be free, financially speaking, we must stop that mentality of saving to spend. Rich people don't save to spend. Rich people save to invest. They save to invest, not to save to spend. Let's avoid investment on fixed asset as a beginner. Let me say this to my friends. A lot of my guys I know at the earlier stage of their life, when they get a job, guess what they do? They save money, they start building house. And they build the house and they are still poor. Not for business purposes. They build it and build it. At the end of the day, they build a house in one village in Nigeria or somewhere in Nigeria. Just keep it there. They get the money stored. That's a fixed asset. And I want to encourage every beginner here that as you are starting, you must find a way to invest in current assets. So you can have time, because current assets are those assets that you can convert to cash within a period of 1 year. As a beginner, that's very important for us. Not to get our money fee somewhere that you don't know when you can turn it over and over. But as time goes on, you can do that. But for now, as a beginner, I advise you to think of investing in current assets. Which stock is one of them? Okay. Another thing one can do to be free is to create another source of income. This is important, my friends. Create another source of income. That's what we are trying to do. That's one of the things we are trying to achieve in this platform. Now, how do you do that? You build a business or you build an investment. You know, I've told my friends over and over that stop building house. Let your business build your house. You know, when you build your business or you build investment and your investment builds your house, guess what? It's done effortlessly. But when you build a house, you sweat and be building house for so many years. Build investment, build business, and your business will build your house, and your business will build your investment will build your house for you. Okay. There's a young man I want to show you from South Africa. Look at this young boy. This guy currently now is about 26, 27 years old. His name is Sandy Shezi. At 23, he has become a millionaire in dollars. Multi-millionaire.
This guy, so would invest for you.
He has become a multi-millionaire in dollars at the age of 23. He started with stock trading. In fact, let me tell you his story. This guy was sent to school. Do you know? He stopped going to school just because he wanted to get himself into trading. He left schooling, left university, and then he got into trading. Today, he's into all kinds of security trading. Forex. He's the MD/CEO of Global Forex Institute, South Africa. This young boy you are seeing, flying his private jet. But we can do that also. Now let's talk about stock trading. Stock trading is the art of buying. It's a business of buying and selling of stocks. Take note of this word business. It's not just an art, but it's a business. That's why in this platform, we are trying to learn how we can trade stocks as business. Not just trading, but as business. That you can just wake up and see that your business has yielded something. You withdraw profit and you reinvest back. You withdraw profit, you reinvest back. That is business. And we are committed to it. Just like you have here, it must be taken seriously. Some people trade stock with a kind of lackadaisical tendencies. And at the end of the day, they don't get the best from it. Because it's done not with commitment. Not with some sense of seriousness. Because whether you like it or not, prices will go up, prices will go down. So if you're busy with some other things and you're not watching the market to monitor the trend, it can bypass you. So it must be taken seriously. Okay. Now, when we talk of trading, how do we get into buying? How do we get to know what stocks to buy? How do we get to know when to buy this stock that is good to buy? That is a very big question, which we must find a way to answer. Because if you can know what to buy, when to buy it, you are on your way to making money in this market. Any market in the world, let it be New York Stock Exchange, let it be NASDAQ, let it be Amex, any market at all. Let it be European market here. Let it be Tokyo, let it be Shanghai, let it be Johannesburg, anywhere in the world. The key issue in stock trading is what to buy, when to buy it, at what point should you buy this thing? This stock is good, but at what point should you buy it? Because a stock can be good, you buy it at the wrong time, you can't make money from it. Because you are a short-term trader. You are not someone that just want to lock your money somewhere and then leave it forever. So how do you know what to buy? That's the big question that we're going to find answer to. We call this decision criteria. 2 ways of knowing what to buy and when to buy. We call it fundamental analysis and technical analysis. These 2 concepts are very, very important in trading. Because when you know what to buy, you can easily know when to buy it. But the question is, what is fundamental analysis? Just as you can see from the slide, you are seeing some pictures here. You can see earning before interest and tax. You are seeing equity. You are seeing liability. You are seeing profit after tax. You are seeing GDP. You are seeing PE ratio. You are seeing revenue. You are seeing debt. And all of these stuffs here, we call them fundamental analysis. So it is analysis of the company, analysis of the economy, analysis of the entire market to make a decision as to what to buy. Not when to buy, what to buy. Fundamental analysis helps us to know what to buy. Then you look at the other one, technical analysis. In our first session, I did mention to us that we take our decision fundamentally and justify it technically. Now, when you talk about technical analysis, you are talking about the analysis of stocks based on previous prices. Let's take a look at the fundamental analysis. What does it entail? I've told you, fundamental analysis uses public data to evaluate the value of a stock or any other type of security. Now, you look at financial statement. It's one of the key things that we use to know fundamental state of a company. There are many companies that are traded, like I told you. In our stock market, for example, in Nigeria, we have about 144 shares, companies that are listed on the main board of the exchange. The question is, which one should I buy? That's a big question, which each of us will find a way to answer. Should I buy Zenith Bank? Should I buy GTB? Should I buy Nestle? Should I buy Cavity? Should I buy FISI? Should I buy Unilever? Should I buy UBA? Should I buy Yocap? Which one should I buy? Should I buy WAPCO? Which one is good for me? And at what time should I buy it? So we find that out using fundamental analysis, what to buy. It measures the state of the company, how heavy they are. How do you know that? You look at the financial statement.
Okay.
A few here who
don't pass here like that because they will see you.
Some of you who studied engineering may not have seen a financial statement. But if you are in the financial field, like in social sciences, you may have stumbled at it. I'm going to show you one today. What are the components of a financial statement? When you look at the financial statement, you will see income statement. You will see balance sheet, which is now called statement of financial position. Then you also see cash flow statement. Then you also see statement of change of equity. You also see some notes. Okay, note to the account. Some of you here who are chartered accountants will understand easily what I'm talking about. With the income statement, you are able to know the profit of the company, the profitability. It reveals to you the profit after tax of the company. In fact, the comprehensive income of the company. It records the expenditure, the expenditure and the income of the company. So at the end of the day, you are able to know the profit after tax, net profit after tax. So that gives you a sense of, knowledge as to how heavy the company is. Okay, you can also look at balance sheet as part of the component of a financial statement. Balance sheet helps you to know the asset and the liability of the company. It also helps you to know how the company is funded, the capital of the company, whether it's through debt or through equities. That's what balance sheet helps you to know. Okay, you can also look at, as part of the component of financial statement, you can also have cash flow, statement of cash flow. Cash flow statement have 3 main items. We call it investing activities. We call it operating activities. Then we also call it the third one, financing activities. Now, I like the operating activities because it helps you to know the operating profit, the net operating profit of the company. Very important. Very, very important. I know some of you are not so much interested in these stories, but what we are interested in, how do we make money from this market? But we are here to gather intelligence. I think it's very important for us. Now, let me show you some key things that we must be interested in a financial statement. When you look at your income statement, you look at your balance sheet, you look at your cash flow statement, you look at your change of equity statement, what do we try to find out from all of these statements? Now, look at them. I call them the element, the key element of a fundamental analysis. One of them is earning per share. We are trying to find out what drives a company up. How do we know a company is good to buy? You look at earning per share, EPS, earning per share. This is very important, my friends. Earning per share. The earning per share tells you what a stock is accrued to, what's accrued to a stock, what you can earn by having a unit of a stock, what you can earn by having a unit of a stock. Now, let me give for example. If you look at Zenith Bank, for example, the current earning per share of Zenith Bank is above 6 naira. It's above 6. That tells you how strong the company is. It is from there a company's ability to pay dividends is expressed. That's how you know if a company can pay dividend. And when investors are trying to make decisions as to what to buy, they look at such company. It shows how heavy a company is. Now, how do we know that? How do we know the EPS? You find your EPS by dividing the net profit of the company, that is profit after tax of the company, by the number of outstanding shares of the company. Now, let me give an example. For example, Zenith Bank EPS currently now is about, let's say, about 6. How do we get that 6? The profit after tax of Zenith, let me show you a financial statement quickly. Let me show you a financial statement. Permit me to show you. Okay. Let me show you a financial statement. Look at, let me show you Zenith. Is it Zenith? Let me show you Zenith at least. Let me take you to Zenith. I'll show you a few stocks in Zenith Bank. Okay. Or, okay, let me show you from Nigerian Stock Exchange. That will save us better. Okay, let me show you Zenith first. Look at Zenith. Okay. Where is Zenith Bank? Okay. What are you seeing? Fola, can you see my screen?
It's visible, sir.
It's visible. What are you seeing on the screen?
Okay, you have stopped sharing now.
I'll stop sharing. Okay.
I'm seeing you.
Good. Let me show
Yes,
you. Let me show you. Okay. Let me show you. Look at this.
Okay, we can see.
Yes. This is the financial statement of Zenith Bank. The first quarter of Zenith. This is a financial statement. Okay. This is Zenith Bank. You can see here consolidated and separate interim financial statement of Zenith. 31st of March 2020. Okay, let's have a look at it. Now you can see the components, what make up a financial statement. I've told you about them. The profit and loss account, which is a comprehensive income. You can see it here. Then you can also see here statement of financial position, that is the balance sheet. You can also see here the statement of cash flow, which is cash flow statement. You can also see here statement of change of equities. Then you can also see here the note. The note helps you to explain each of those points in each of the statements. You know, different things are said there. So the note helps you to explain it. Okay. Now I was talking to you about how to know EPS, earning per share. This is very important. I told you that to get the EPS, you have to divide the profit after tax of the company by the outstanding shares of the company. This is important. It goes across every company. But we are looking at Zenith. If you look at Zenith Bank here, look at the group. Okay. If you look at the group, you can see profit after tax. This is profit after tax of the company. So look at it here for a quarter. Okay. Maybe I would have shown you the full year, 2019, the full year. But this is first quarter. Now we can have EPS per quarter. But going by this, you have to divide this earning per share, that this is profit after tax, by the number of outstanding shares. Let me show you quickly the number of outstanding shares of Zenith Bank. Number of outstanding shares of Zenith. Let's look at it quickly. Where can we find that? We can find that here. Okay, let me try to show you that. Okay, good. Look at the earning per share, the profit up, okay, let me show you the outstanding shares of Zenith Bank. Let's look for it and then find it here. Okay, the outstanding shares of, are you posting the screen also? Can you see the screen, Lucky?
It's visible, sir. Yes, sir.
Okay, well, very good. Okay, let's look at it together. Now let me click on Zenith. You can follow this on your own when you want to have time to just go through the exchange. Okay, you will see the outstanding shares of Zenith. Look at it here. Look at outstanding shares of Zenith. Okay, yes, look at it. 31.9396. Okay, 31.3 billion shares. Okay, these are outstanding shares. Okay, the profit they have made, the profit after tax, you want to know how much is accrued to a particular share, 1 unit of share. This is the volume of shares in Zenith Bank that is available for trading. The ones in circulation, that's what we call outstanding shares. This volume is 31.3 billion shares. That is to say, if you can buy all of these, or let's even say 20% of these, you can become the chairman of Zenith Bank, which I think some of us will become in the future. Who will become the owner of these banks? So we can buy up everything here and buy and buy and buy and buy. If you're able to buy up to 20%, you become the owner. You sack the board. You can sack the MD immediately and then put your person you want to put as the MD. Okay, so when you divide the profit after tax, which I showed you in the statement, by this, it gives you the earning per share. The earning per share of the company. That's how you find that out. So every company have that. So it is a critical element. It's a critical ingredient that is required to measure how healthy a company is. We are trying to find out what should I buy. You have to look at that. Very, very important. Very, very important. But sometimes, let me put a little clause here. Sometimes, if a company has disposed out some assets, which give a rise to their profit after tax, and then invariably leading to a rise in their EPS, such EPS can, in a way, be misleading. That's why we look for cash flow statements, which helps us to know the operating profit of the company. When you're able to know the operating profit, that is the profit they can duplicate. That's the profit that is repeatable. Very, very important what I'm saying, please. Very, very important. So, my friends, to know stock to buy, you look for the EPS. Very, very important. Okay, let me go back to my screen. You look at the EPS. EPS is a critical element which we must look at before you take a decision to buy a particular stock. Okay, let me quickly move on to the next one. Okay, you can also look at the PE ratio. The PE ratio helps you to measure how long it will take you to recoup how much you have used to buy the stock. Let's say, for example, you have bought a stock at, let's say, at 16 naira 80 kobo. How long will it take you? How long will it take the price of that stock? Or how long will it take the earning, that's the earning per share of the company to recoup how much you have bought it? That's what PE ratio measures. They call it price earning. The price at which you have bought it, how long will it take the earning to cover it up? Now, if you look at Zenith Bank, for example, the EPS of Zenith is about 6 naira plus. And the current price of Zenith now is 16 naira 80 kobo. So how long will it take the earning to cover up the price? It's also a very good indicator. Now here, the smaller the PE ratio, the better the company. That's why if you look at banks like Zenith, you look at UBA, you look at GTB, all those companies in that sector, you begin to see which one have the smaller PE ratio. So the smaller the PE ratio, the better the company you can buy. The next one is return on equity. Then we can also have the dividend per share. We all know this. Okay, I've shown you example of a financial statement. I'm going to entertain some questions, maybe later. Let's move on quickly to the next one. Technical analysis. This is very important for traders. Haven't decided on what to buy. The next thing that should bother you is, at what point should I buy this stock? Because you can buy a stock at a certain price and not make profit, yet the stock is good. That's why someone like me, I don't like trading with GTB. Because if I show you the chart of GTB, the movement is not very fast. It's secured. You hardly lose money, but the chance of making money is not high because it's not too volatile. So a company can be good, and the timing of buying it is wrong. So if you buy a stock wrongly, you will not make money from it. That's why we bring in technical analysis to determine where was the price before. Now, where is it going now? So we use the previous price to forecast where it can likely go. Technical analysis is a means of examining and predicting price movement in the financial market by using historical price charts and market statistics like the volume, market statistics like the deals, market stat like how liquid the stock is. It is based on the idea that if a trader can identify previous market patterns, they can form a fairly accurate prediction of the future price trajectory. That's very important. As traders, we use technical analysis a lot. Okay, let me show you one of them. Look at technical analysis. When you think about technical analysis, two things are important: the support level and the resistance level. This is very, very important, friends. The support level are certain, and the resistance level are certain predetermined level of the price of a stock at which it is thought that the price will tend to stop and reverse, whether upward trend or downward trend. Now look at the chart, you can see. Look at this. Here is what we call resistance level, is the up. The price moves from here, touches this line, goes down. Okay, you can see it here. It moves up again, goes down, move up again, goes down, move up again, and that continues. The trend continues. Now the down part is the support level. Now when you study a stock for a while, you will know at a certain price, when it gets there, it stops. Because it's not only you that is trading this market. Other people are still looking at these tools. So when the stock gets to a certain point, it stops there. The next thing is it will start picking up. It will start picking up. Once it starts picking up, at that point you cannot come in and then you buy. When you buy, the next option for the stock is to keep going up, especially when you have seen that fundamentally speaking, the stock is good. Thereafter, you can buy. This is the support level. This is resistance level. Now, this is very, very, very important for traders. So, my friends, if you're going to be a good trader, you must master how this works. We must master how it works. So we can be able to buy at a support level and sell at resistance. That's how you make money from the market. You can see all of this. This gap, the difference between the resistance and the support is your price, is your profit. This is your, okay. I think at this point, I would like to show you, let me show you quickly. Let me show you something. Let's look at fixing, for example. I just showed fixing recently. Last week, I sold fixing for some of my friends. Okay, let me show you fixing. Look at the movement of fixing in the last 1 month. You can from there begin to understand how this stock moves, how it turned out within the last 1 month. Let's look at it together. Let me show you fixing. Look at it. Let me go to Bloomberg to show you fixing. Where is fixing here in Bloomberg? Okay, let me show you. Okay. Now let me click on fixing here. Can you see my screen? Yes. Lucky, can you see my screen?
It's coming, sir.
Okay.
It's coming.
Can you see my screen?
Can yes, I can.
Yes, it's visible now.
From here.
I'm showing fixing. Can you see it?
Yes.
Yes, it's visible.
Okay. This is 1 month of fixing.
Yes, I can see it.
Thank you. This is 1 month of fixing. Look at it. Look at how it moves here. The last day, this is on the, what date is this? Here we have fixing this on 23rd of July. It was at 3, I bought at 3 naira. for some of my friends. I don't know if they are here now. I bought at 3 naira for them. But look at fixing as at the last time. I sold here. I sold at this point. I think I sold on the 19th. But after I sold, no, I sold on, no, this is where I sold. I sold on 17th. I sold mine on the 17th. Now it came down a little bit. They rush it back again. Look at the movement. So you can begin to see, let me give you a 6 months chart to give you an idea of what support look like. Look at this point. Look at it down here. Okay, you can see the movement here. It moved up to this point. It came down again. This is what we call high highs. Higher highs. It's getting up. When you talk of higher highs, it's forming higher support level and higher resistance level. Higher support level, higher resistance level. So it takes you some time to study the movement before you can enter such stock. Look at it at this point. Here it was 221. What date was this? This is on the 20th of March. This is 6 month chart. 20th of March, fixing was 2 naira 21 kobo. But here are we today in August, it's now 4 naira. This is almost giving you 100% return. This is almost giving you 100% return of your investment. But I bought it at this point at 3 naira. It was at 3 when I bought. It was at this point I bought. So at 3 I bought and at 6 I sold. Now, something you have bought at 3 and you have sold at 4, we have made 1 naira profit. 1 naira of 3, that's 33%. 33% of return has come to you. Here we are learning how we can make money. A lot of people work, they don't know how actually to catch the fish. They just feed them with fish. But in this platform, we are trying to learn together how we can become fishers. It's not enough for someone to be paying us. It's not enough for us to, okay, I go to work and my boss does whatever he's doing and they just do business. I don't know what they do. See, my friends, such life is not sustainable. Such way of just getting to work, someone pays you, you don't know how to make money yourself. Such ways of life is not sustainable. It's not sustainable. That's why we are trying to learn together. What else can I do? What else can I do? This is one of the things you can do. Just imagine you have invested, let's say 1 million. 33% of 1 million is 330,000, if I'm very correct. 33%. 330,000 has come to you within 1 month. I think that makes sense for me. There are other stocks I can show you. Many other stocks I can show you. Let me show you Guinness. I also bought Guinness and I sold Guinness for some of my friends. Look at Guinness. Not only my friends, I bought this for myself. Let me not talk about my friends alone. I bought that for myself also. I think I told him that I want to sell it. Yes, I bought Guinness for myself and I sold. Look at it. Where is Guinness? Okay, this is Guinness. Okay. Look at Guinness. This stock, I bought it for a client. Do you know, just 1 week, I bought this stock for a client at 12.90. I bought for another at 13. Look at it today. It got near 16. Let me show you. Look at it. This is in 1 month of Guinness. Okay, look at where I bought it. I bought at this point for someone. Okay, I bought mine at 350. I bought some at 340, 1340. Now I sold mine at 515. After 1550, I sold it, or 1540, thereabout. Okay, and we got some small cash. Okay, you can also get some small cash. So that's how you can make money from the market. Let's go back to what we are trying to find out this evening is, how do I know what is good? How do I know what to buy? How do I know when to buy it? I've told you that you use fundamental analysis to know what to buy. Look at this. If you can see my screen here, from Bloomberg, you can see the EPS of this company. I think this gives us a full statistics here. You can see the EPS. Now you can also see the outstanding shares here, 2.1 billion. That is for Guinness. You can see it here. Okay, you can see the EPS, 1.8. You can see this. Okay, so with this, you're able to know how healthy the company is. You can see their revenue, you can see the net income, their profit margin, and all of that. So, but what is important for us, after knowing what to buy, when to buy it is very, very important. Very, very important. Because the stock can be good, like I said, and yet it's not right for you to buy. You can't expect me now to buy fixing at this price. It's too high. How do I know it's too high? Look at it. I just showed you the screen now. How do I know that fixing is too high at this price? But for this Guinness, I don't think Guinness is too high at this price because it still have a lot of growth potential. But look at fixing. Look at fixing here. I think it's too high at this price, at 4. Why do I say so? That is too high at 4. Let me show you the chart for 1 month because I'm a short-term trader. And as a short-term trader, you are looking at within a space of 1 month, a space of 2 months, a space of 3 months. Okay, how fast it can be so you can be able to buy and quickly sell. Okay, look at it. This is the highest it has done for 1 month. Now, you are looking at support level. You are looking at resistance. At this point, you can never predict where it can get to. So, a smart trader, you are praying it should go down. In fact, when it was here, I was happy that this thing will go down more. I was praying that it should go down to this point, maybe at 3 or 3, a little bit above 3. But it didn't get there. It went up again because the demand for it was a bit high, especially at this time. Okay. I know you have questions. Maybe I should allow you to ask questions so that I can relax a little bit. Let me attend to your questions quickly so we can make it more discussionary. Great. Let me hear your questions now. I'm seeing my friends. I'm seeing Jerome. I'm seeing Jerome Shegun. Jerome, where are you from? Yes, unmute your mic. Let's talk.
Hello, Austin.
Yes, I'm seeing
Can you hear me?
Yes, I can hear you.
Please, so I have a lot of questions to ask, but
okay, let
me just limit it. Yes, let me limit it to,
to
2 of them.
Okay.
Number 1, you made reference to the price earning ratio.
Good.
You said it's always better when it is low.
Yeah.
Right?
Yes.
Yes, because I believe that the price earning ratio calculates the share price to the earnings of the shares. Right? Am I correct?
Yes.
So now, if that is the case, how does that play out? How does that play out? Because I'm yet to understand why it is like that.
Okay. Let me answer it quickly. You are trying to find out which stock should I buy. There are many of them in the market. You are looking at, I told you in Nigerian stock market, you have about 144 stocks to choose from. In America, in New York Stock Exchange, the NASDAQ, and the AMES, these 3 exchanges, you have about 7,000 stocks to buy from. They are quite large. The question is, what will I choose? What will I buy? Now, when you come to the sector, you are looking for stocks that have low PE ratio. PE ratio measures how fast an earning can cover up for the price you are buying it. That's what it measures. For example, I use Zenith Bank as an example. The earning per share of Zenith now is about 6 naira. And the current price is about 16. So you can see that the PE ratio there should be about, how many 6 do we have in 16? About 2, just 2 point something.
Yeah.
2 point something. So if you check other companies in that sector, you will discover that their PE ratio may be higher. So how long it will take for a company to recoup, to cover for the price you are buying is what PE ratio means. So the smaller it is, the better the company.
Okay. I get it.
Good.
I get it. Then another question again is this. Now you are talking about the support level and the resistance level.
Yeah.
That is where I'm really coming at because I believe, like you said, it's very, very important.
Yeah.
Right? Now, what are the things that we have to look out for? Let's say, like, you're giving an example of Fitsin and Guinness and GT Bank and Zenith, right?
Yeah.
So at what point do we know that, okay, this stock is at the support level now and we should buy?
Okay.
Or it's at the resistance level we should not buy and all that?
Good.
I think that's really very, very key. aside from looking at the fundamental analysis that you talked about.
Yeah, very, very important. You know, that's why we determined that looking at the historic movement of the stock. For a while, it would have been trading. You see the stock maintain a pattern. It goes up, it goes down, it goes up, it goes down. If you look at the chart, there's a point where it gets to, it picks back. Either close to it, it goes back. Close to a certain point, it goes back. So when you study it over time, that when this stock touches 2 naira, it bounces back. Then last 2 months, it touches it, it bounces back. Last 3 weeks, it does the same thing. You know that that's the support level.
Okay.
That's support level.
So what you are trying to say is that it gets to that point, it becomes constant at that point. It becomes constant. Is that what you are saying?
Either exact that price or something close to it. For example, if a stock is 2 naira, for example, when it gets to about 1, let's say 210, in fact, what I do is when I see that it's nearing that price, I'll just buy quickly, because sometimes when you allow it to get to that point, sometimes you don't get it again. But the wisest thing to do is when it touches that point, in fact, what we advise ourselves, once it touch it and you see another sign of reversal, quickly enter. Quickly enter.
Okay. Okay. Please, I would like you to show us that in the chart.
Okay.
What you just said now, you have to demonstrate in the chart so that we'll know.
Very good. Let me show you the chart in, let me show you other stocks, like, let me show you other stocks. Okay, for example, this is FISIN. Let me show you a 6-month chart of FISIN. Okay, when you see the movement in FISIN, look at this point. Just have a look at this point. Look at this point. You will see that it touches here, it goes up. It touches here, it goes up. It comes down again, it goes up. Now, here it beat it down a little bit. It goes up. Eventually, it goes down. Now, when you get to such a point, for example, if you are trading on this, at this point you buy, at this point you sell, at this point you buy, at this point, sometimes you are sold here, but you continue going up.
Okay.
So it's likely that you can also allow it to continue going up before you sell. But if you don't want to take the risk of allowing it to continue going, you can sell at this point.
Okay.
Then it goes down again. Look at the line, look at the movement here. Can you not see that? There's almost like a line drawn here.
Yeah.
You can see maintain a pattern. So when you see a stock maintaining such pattern, it's a good buy. Go ahead to buy it. Let me show you UBA. UBA has maintained such a pattern recently. Look at UBA. Look at UBA here. Okay. Let me look for maybe 1 month or 6 months of UBA for us to get a proper view of what it looks like. Okay. 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 Now look at UBA. For a long time, UBA has not really done so fantastically because of this movement. Look at where it's settled. You can see the support level here. Do you see UBA? Maintain a line at 6. Look at UBA at 6. This is 6 here. Look at it maintaining certain level. Do you see UBA here? One of us here, I sold UBA for you, I think at 70 recently. I sold UBA at 670.
Yes.
Just bounced off, I sold at 70. So you can see that it was here at 6. When I bought at 6, I was very relaxed. I was very, very comfortable to buy UBA at 6 because 6 is like the support level where it has been for a while. And now you see UBA now at 6, I think it's close at 665 on Friday. But I sold for someone at 670 recently. That was last week here. Okay. So you can see the movement. That's what we call support level. Okay, but if you look at this point now, where it is here is about 720. Chances are that it might push up down to this point.
Number top 7.
Okay. But as a short-term trader, once it gives you something like this, I advise you to sell and then make your money as fast as possible. Okay. Good. Any more questions, please?
I'm okay, Austin. Okay, Austin.
Okay, thank you very much. Let me hear some more questions.
Yeah, I have a question. This is Victor from Netherlands.
Okay, Victor, please.
In the case that maybe the support level is broken,
okay,
for example, so how do you handle such a situation? Do you have to wait for a long time for it to come up again. Maybe the support level that was broken might become a resistance level in the future. So how do you handle such a situation if a support level has been broken? Do you have to like wait for the market to like build up again?
Thank you very much, Victor. That's a very smart question. That's a very smart question.
And the second question is this: what is the best time frame to analyze the trend?
Okay.
I mean, is it 3 months or 6 months, or as a long-term trader, what's the best time frame? As a short-term trader, what is the best time frame to analyze the trend to know, okay, I have to buy and I have to sell?
Fantastic.
My third question is, can you always say when you want to sell? I know you can buy I believe what you can buy when you want to buy, but if I want to sell now, can you always sell at any time?
Yes. Let me start with the last question. Can you always buy when you want to buy? Can you always sell when you want to sell? That's a very good question. That's why as a trader, you trade with liquid stocks. There are some stocks that are very liquid. That is, you can always buy them, you can always sell them. So that's the stock you trade with. How do you know such stocks? They have outstanding shares that are reasonable. That another question you will ask me: how do we measure reasonability of a volume of outstanding shares? At least the volume should be something above 2 billion or 3 billion. If you look at a stock like Zenith, I just showed you the outstanding shares of Zenith. That's about 31.3 billion shares. So that you can always have buyers and sellers from time to time. Okay, so you can always buy, you can always sell, provided it is a liquid stock you are buying and trading with. Okay, the next question is, what if it breaks the support level, the support level? Now, that is one of the risk management strategies. What you do is, as you are buying a stock, in fact, in our next lesson, I'm going to cover that. In our next lesson, I'm going to cover it. When you are buying, what you do is you set up a stop loss order. And next 2 weeks, I'm going to teach us how to use, how to set. I think I may even cover it a little bit today because now we are taking 2 weeks. You set up a stop loss order from the time you are buying. When you are buying a stock, you define 3 prices. Number 1, the selling price. From the day you are buying, the selling price. Then the buying price, the selling price, and stop loss price. In case market goes against you, you just have to cut the loss off. That's how to manage risk. But to mitigate that, we make sure that we are buying at a good support level. But because it's futuristic, you never can tell what will happen. COVID-19 can just show up. You never can tell. So if that happens, just cut the loss and have your capital back. So that's what we'll do. But what's the second question? I missed that.
Yeah, my 2 questions are answered. The last question was, what's the time frame for
time frame.
A good support?
Yes. Good.
6
time frame.
months, 1 year, 3 months.
Okay, good. Time frame. That's very, very important. It depends on your objective. Okay, it depends on what you want to do. If you are a short-term trader, you can, like, for example, I bought for somebody and I sold within a week. 8 days, I have bought and sold. Just 8 days. We've bought, we've sold. So it depends on what you want. But as a short-term trader, just you see, I'm just using 1 month chart to analyze. Because my target is, let me target 1 month. Because I trust that market will go up within a short period, it will go down. But the truth is, sometimes you can take up to 2 months. Sometimes can take up to 3 months, depending on how the market moves. But try to make sure that as a smart trader, you are looking at 1 month to buy and to sell. It's attainable and it's possible in the market.
Okay, thank you very much.
Welcome, sir.
Hello, Austin. Can you hear me, please?
Yes.
Yes, you were talking about fundamental analysis in terms of, looking at the GDP, looking at the operating environment of the organization, then coming inwardly to look at the internal analysis in terms of the profitability, in terms of the earnings per share and all that. Please, can you demonstrate how the operating environment, for example, impacts on the prices of stock of the company?
The market is largely operating in an environment. Okay. For example, if you look at Nigeria, for example, the mainstay of Nigeria is oil. you can understand that when the prices of crude is going up, there is a way it impacts on our market. How does that happen? It triggers demand. Because it's the mainstay of Nigerian economy, people now have more money to play around. Banks can now have more money. So most of the cash find their way into the stock market. Now, apart from that, there are some interventions also, business intervention from the CBN and other organizations. And apart from that also, if you look at, if there is a reduction in interest rate, when that happens, some of them can also find those excess money can also find their way into the market. So that's what I mean by environment, economic environment. And apart from that also, we also look at the fiscal environment of the country. If the government, for example, are spending on infrastructures, investment is going on, spending of the government, some of the money find their ways into the market also. When that happens, it boosts demand. It triggers demand. And we know that market generally respond to the forces of demand and supply. So when there is a higher demand, prices goes up. That's exactly how it affects the market. Okay?
Okay, Austin, thank you.
Good. Okay, any more questions? Okay, I think let me just continue a little bit and then we'll come back again to take more questions. Okay, let me go back to the slide so we can just round it up from there. Okay, you can see what we are talking about. We have talked about resistance, we talked about support. These two key elements are very, very important for any trader. Some of you that trade forex is also very important for you. If you are trading forex, okay, you also use support and you also use this. My brother was asking a question about if it breaks support, what do you do? That's what we call risk management. How do we manage risk? Today, someone was asking me, when I was talking about stocks to some guys in Nigeria, somebody asked me, how do you manage risk? That's a good way to ask questions. And that's exactly what a businessman should do. How do you manage your risk? In this market, risk simply means is the possibility of something bad happening. In this case, it is the possibility of losing money. Many people fear to take risk. In fact, people, we call them risk averse. They don't like risk. But the part about life is, whether you like to take risk or not, you're also taking risk. In fact, for not taking risk, you are taking risk. Okay. You know, last week I told us, Bishop Idausa said, it is risky for a man not to take risk. Last week I also told, or last 2 weeks, I told us that Mark Zuckerberg said that the strategy, the only strategy that is guaranteed to fail is not taking risk. You see that? The only strategy that is guaranteed to fail is not taking risk. So if you say I will not take risk, you are guaranteed to fail. In fact, your life is at a risk. I hope we know that. Our lives is, nobody can tell. Now you talk of coronavirus, our life is at a risk. So risk is inevitable as far as life is concerned. You must take risk. That's why we use all kinds of strategy to minimize our risk, okay? By using the fundamentals, using the technicals, using support level. There are other things we use, which I'm going to bring up to us in our subsequent platform, forum. So we can learn more how to take and how to minimize our risk levels, okay? Good. Now let's see some more about how to manage risk. Look at this, how to minimize risk in trading. What you do is watch out for support levels before taking a long and a buy position. This is important. You know, some people ask us to buy for them because their money is in our hands or they have their money in their account, they are fast to buy. Wrong strategy. Now let me say something here. When you have money for trading, the rule is be patient. When you have cash in your trading account, the rule is be patient. Be patient for what? Be patient for the market to give you good opportunity to enter. Be patient because sometimes you have the money, you want to buy, If you give me 100 million, I can burn it in some few seconds. It's a click, all the money is gone. But you must trade professionally. So as a professional trader, it's not every day you buy. No. You wait for the market to give you a room. to buy. So watch out for support levels before taking a long or buy position. Watch out for resistance level before you sell. Look for the point it gets to and bounce back. That's the point. When you begin to touch that point, that's when you sell. Now, the next thing to do to manage risk is set a stop loss after defining your risk to return ratio. I'm going to explain this later. Set a stop loss order after defining your risk to return ratio. What do I mean by that? Let me explain that. Look at that here. Every stock you are buying, you've made up your mind that, okay, in this stock, I want to make 30%. How much can I lose? How much can I sacrifice for this 30%? I want to make 20 naira. How much can I lose to make 20 naira? That is your cost. So I like to adopt 1 to 3 per trade. Now, for example, I said, okay, I'm buying this stock at a certain price. Let's say at 3 naira. Now, I make up my mind that if it drops, let's say 10% down, I should sell it off. That's a stop loss. That's a stop loss. Then it returns 30% up, I sell it. So at every point you are buying, as a professional trader, you set up this stop loss order and then how much you are going to sell. So at every trade you are entering, it's very important you set this up. I like to adopt ratio 1 to 3. That is, for every one I lose, I'm ready to gain 3. So when you do that over and over, I tell you, you are going to be at an advantage all the time. But sometimes, some people feel that, okay, because I trade once and I record the loss, that means the market is not profitable. No. If, for example, you do, let's say, 5 trading, and you are able to win, let's say, 3 and lose 2, and your loss is 1% of 3. 1% of 3. Now, the ones you gain 3. And now you win 3 trades out of 5. Let's say you lose 2 and you gain 3. The 3 you have gained, you are still better off. If you look at your net income, your net earning, you have made good profit. I hope I'm not too serious. Sometimes when I'm very sure of what I'm saying, I'm very serious about it.
No, hello, Austin. Austin,
Okay. Yeah.
Can you hear me, please?
Yes, I can hear you.
You see, I am having a difficulty understanding this part, you know.
Okay.
But let me just explain the way I understand it.
Okay.
Like the 1 to 3 that you're talking about, that you're adopting during trading,
Yeah.
is that, okay, the one represent like 10%.
Okay.
When in case you're losing money, so it stops.
Yes.
Kind of minimize your position.
Your loss, yes.
And the 3 represents that, okay, maybe 30%.
Exactly.
When you gain 30%,
You sell.
of the price that you bought it from,
Exactly.
you now have to sell. That's
Exactly.
what you're trying to say, right?
Exactly, yes. Perfect.
Okay.
Perfect.
Why is it? Can you go more than that when you're setting your stop loss? Can you go more than? Can you set it as 1 to 4, for example? I'm just asking.
Yes, you can do that, but you have to monitor the market, because sometimes when it gets to 3, the bid is still very heavy. When I mean by bid, people who still want to buy the stock are still so many. So at that point, you just have to be patient a little bit and let it continue gaining.
Okay.
Yes, it can happen, but you have to be on it and let your eyes be on it, because sometimes, if, for example, a company has announced dividend, for example, or they have announced a bonus, and everyone is rushing into it, you don't have to say, just enjoy the profit and just enjoy your ride.
Okay, I was even coming to that. You know, I was even coming. I thank God you just mentioned it.
Yeah.
You know, I wanted to even find out what announcement of dividend or bonus, right, has. What impact does it have on the stock price?
Yes. What it does is, what it does is it triggers demand. Don't forget, the market runs on demand and supply.
Okay.
So what bonuses and dividend does is they trigger demand. And when they trigger demand, you know, we have talked about good stocks. We have looked at good companies. That's why when you are buying, the first thing is to use fundamental analysis to know good stocks. So when you know a stock is good and they announce dividend or they announce bonus, it triggers the price up. So, and when you're already in that position, as it's flying up, you just be cruising and enjoying yourself. Every day, you just look at your money rising 10%, 10%, 10%. You just be smiling. That's what happens. Okay, good. Okay, are there any questions? Let me now go back so we can entertain general questions. Yes, let's take more questions now. Okay, we have got more friends. Any more questions, please? Let's get more questions.
All right.
Yes, I'm seeing John Eduro. Pastor, how are you, sir? Yes, and I'm seeing Samuel. Who is Samuel? Samuel. I'm seeing a Miracle Konko. Miracle, how are you? I'm seeing Johnson Olajide. Johnson, where are you from? Yeah. Yes, I'm seeing Damien. Damien, where are you from? Yes. Let me hear from these friends.
Kano.
Okay, from Kano State. Good. Nice to have you. Nice to have you. Sunday or Layude or Layude. Where are you from? Sunday. Okay, let's take some more questions. Let's take some more questions. The market really is very interesting these days. And I really encourage everyone to, this essence of this platform is to ensure that each of you, I'm a little bit careful to make some statements. But let me tell you, if you are still being paid, if you are still being paid, I don't care to know how much you are paid. If you are still being paid, if I tell you that you are not very rich, I hope I'm not making too bogus statements, but that's the truth. If you are still being paid, I don't care who pays you. If you are still being paid, that you just work, come to the place, receive their AC, go back home, you are still being paid. That's not sustainable. That's not sustainable. And some of us who are already getting older, I want to challenge you. What will you tell your children? That they paid me, and they paid me, and they did not pay me. At 50, you are complaining they have not paid us. Oga, I'm sorry for you. I'm sorry. If at 50, at 60, we are still saying they have not paid us. That's a dangerous spot, friends. That's a dangerous point. So whatever it will cost us to discover another alternative, how we can, on our own, learn how to diversify our income and make money ourselves. We just have to do that. Today, I told them when I was talking to some people, I said, if you're going to be poor, don't be poor at 60. If you like poverty, don't ever try to be poor at 60. If you are poor at 60, I'm sorry. Don't ever make that mistake. Don't make that mistake.
Why did you say that? Sorry.
I'm telling you, it's dangerous, Iman. If you are poor at 60, I pity the person. If you like poverty at all, because at 60, let me tell you the danger. You cannot walk anymore. You're already incapacitated. You're already weak. And at that point, you can't take risks anymore. You can't do it. And at that point, the cost of living is getting higher. God forbid, sicknesses are coming in. You are becoming weak. Your earning capacity is going down. So you have to rely on what you can do. At that point, your company will sack you because you can't add value anymore. And you see, you're not going to die. You're going to live for 90 years. You will live for 90. What because of you at that time? If you're going to be poor, friends, don't ever be poor at 60. Don't try it. So I'm just going to beg us. Let each of us learn how we can diversify our income. This is what bankers do. Some of us are happy to work with them. This is what they do to get money. This is what they do. Have you asked yourself, what does banks do to make money? That today they pay their staffs heavily. What do they do? Let's find these things out. Some of you who are coppers, who just finished school now, you must ask this question on time. We just have to. See, this is regardless of where you live. I don't care the country. If you are being paid, you know, we all grew up in families. After a while, your father will say, go and marry. They will send you away. They are unhappy with you now. But it's only at work I see old men who are still looking for a job to be paid. But we have families. At a certain age, they say we should go away. Go and marry. Go and set up your own home. Go and set up your own family. But it's in job, I see people, at old age, they are still coming to work. To be, Oga pay me now, Oga pay me now. I don't care the country where you are. Be in Canada, be in Germany, be in US, anywhere you are in the world. If you are still being paid, it's not sustainable. I don't want to say you are poor. Maybe you have some cash, but it's not sustainable.
Austin, I want to say something, please. Austin, I want to say something. Let me say something.
Okay.
I think for me, the way I want to look at it is that fine, you can work. I mean, but I look at it in another point of view that you have to diversify your income.
That's the point.
There's nothing wrong in you working and hustling by the side,
yes,
or doing other things, and at the same time you are investing in FX.
Exactly.
You're investing in stock exchange and all that.
Yeah,
you're
that's
trading
the point.
and you're making money.
That's the point.
So I think that's the way I want to look at it.
Yeah.
Like for me though, in fact, when I heard about this opportunity, because I live in North America and I've been looking for opportunity, right? But I've not been able to. You know, I was able to get some, you know, but they are not sustainable.
Yeah.
You understand? So from when I even saw your opportunity, I really jumped at it because I knew what you were saying is true. For me, it kind of resonated with the kind of things I do.
Yeah.
You know, I work in one of the biggest banks in the world, and honestly speaking, the money they pay you sometimes, my side hustle, I make it in 1 week.
Yeah.
The money they pay me in 2 weeks, I make it in my side hustle in 1 week.
Yeah.
So what am I trying to say in essence? What I'm saying is that, Austin, you're very, very correct.
Yeah.
A lot of these guys just use their time, useless your life. In fact, I've seen people that were sacked in my office that have worked for like 25 years in my office. They were being sacked.
Imagine.
It's not that they did anything wrong.
Imagine.
Right? Like in my own case, for example, I even faced some challenges recently in my office where, in fact, my boss used to be a white. She was just against me for no reason.
You see that?
Right? For no reason. I had the best qualifications. I had the best expertise, but she was against me. It took the intervention of our senior director to intervene.
Yeah.
So what am I saying in essence? If that senior director, who happens to be a black woman, did not intervene, maybe one day I would have just been asked to go home for no reason.
Yeah.
So what am I saying in essence? Austin has really made a very good point. You have to really look at diversifying your income, like he said. And Austin, after this meeting, I'm going to give you some time to rest. And as usual, I'm going to call you.
Okay.
We really, really need to talk.
Good. So thank you guys so much. This is my passion. This is what I do. And that's what I have to encourage every one of you. Look, if you don't sack them, they will sack you. Whether you like it or not. And the danger is they will sack you when you are not ready. That's the danger. The best thing, you have to be proactive. If you don't sack them on time, they're going to sack you. And they will sack you when you are not prepared. And that time, they have carried you to climb a certain, giving you, what do they call it, a step to climb up, and they remove the step. You will jump up and break your neck at that time. That's dangerous. That's why, guys, we are talking about diversification. We are talking about generating sources of income. So when they sack you, you tell them away with you. And as you are telling them away with you, they'll be begging you. Many years ago, I was in Nigeria. They were begging me to stay with them. I said, guys, no, I have to pay. Don't stop paying me. Let me pay myself. Let me pay myself at this time. Some of you will think, oh, because he's abroad. No. I said, you guys, you stay. That's the mentality. That's how it works. So, guys, if you're going to be free financially, you must take responsibility for your life. That's why one of the things we can offer by the grace of God is what we know. Diversification through stock trading. This is key. This is critical. Okay, let me go and round up with the screen. Are there any questions more? We have gotten some more people now joining us, though you guys are late already. Any more questions? Are there any questions more?
Hello, Austin. I have questions,
Okay,
but I'm
go
not
on.
going to ask it on this platform.
Okay, we'll talk later.
Yeah, we'll talk later.
So let me show you the last screen before we round up. Okay. Okay, go ahead. Okay, go ahead.
Hello?
Yeah, go on. Go on, please. Who is asking? Deborah Erasmus, are you from Netherlands?
From Nigeria.
From Nigeria. Okay, go on, please. Where are you from in Nigeria?
Kano State, precisely.
Kano State. Okay, please. Go on, please. Go on, please. Okay, let me quickly tell you guys about our company. By God's grace, I am the MD CEO of Austabby Global Services Limited. We are registered in Nigeria on the 8th of June, March 2010. We are investment consultants. Okay, what we do is we help you to monitor your investment. Our goal is to stand between you and your investment. Okay, that's what we do. We know that a number of you are so busy. Lucky, control that, please. Lucky, control that, please. Ola, please control that. So we ensure that we help you. We know you guys are busy. Maybe some of you are doctors, some of you are accountants, and you have somewhere you are working and all of that. We know you are busy, but you have to diversify. So what we help you do is we help you to monitor the markets. And all of this I've tried to explain. Some of you may not be able to get it at once, but you have to make money from now. So what we help you do is we hold your hands while you learn to walk. We hold your hands while you learn to run, so that as you continue trading and we help you to guide you, from there you are able to learn and begin to trade yourself. That's what we do in Austabby Global Services Limited. Okay, like I told you before, my name is Augustine Ije, and I'm the MD CEO of the company. And you can send us email. You can see our email displayed here. That's my direct contact. You can also contact us through WhatsApp, and you can call us directly. Hopefully, we're going to be together here again on the 6th of September. We're doing this every week, but now so let's relax a little bit. So we are going to start again, meet again on the 6th, that's next 2 weeks, 6th of September. We are going to dwell more on more detail about technical analysis. And we're going to see how the market perform also. From there, we can be able to ask some more questions, and then we answer them and see how we can make more money from the market. I will show you some more stuff next week, because a number of them actually did well. UBA, Access Bank, Fixing, UCAP, they did quite well. And when you put your money in these stocks, I tell you, you make money from them. Look at it. If you are able to rotate it from, look at the Fixing I just showed you. Now you buy Fixing, you sell. In a year, you can rotate it over and over, over and over. Some of you are fond of keeping your money in the bank. Bank will not give you more money. In fact, if you live in Europe, you know, interest rate in Europe is 0%. If you keep money with the bank, the commercial banks here, the CBN will charge them for keeping money with them. But if they give you, if CBN gives you money, they say, take, don't pay interest. Don't pay interest. So you have to invest your money. Very, very important. As we do that, I pray that we'll make more money. Any more questions so we can round up? Some of you came very late. I'm sorry you came late, but we have discussed quite a lot. You can watch this video on our YouTube. Maybe I should, but Lucky, post the YouTube channel for them. We are streaming live now on Facebook, but we have our YouTube channel. I'm going to show that. How do we show that now? Lucky, can you post our YouTube channel so they can see it? How do we see that? Fola, can you post our YouTube channel? so they can have access to it. You can watch it on our YouTube. Maybe by tomorrow or next, it will be uploaded. You will see it on our YouTube channel.
I'm working on it.
Okay, I'm working on it. Okay. So that they can have it and then they can watch what we are doing. Okay.
He's muted.
When we are trying to tidy that up, you can contact us at any time through our email, WhatsApp, repeat any time we respond to you. Okay. At any time we can respond to you if you want to start trading, whatever you are.
No, sir.
Yes.
Is it possible, sir, to get the presentation on maybe on slide, maybe through email or at least maybe get it?
Yes, we have shared our YouTube. You go to our YouTube and watch it on our YouTube.
Okay.
It's very simple. Just go to our YouTube and watch it from there. Watch it as often as you can.
Okay, sir.
Yes, we have already posted our link now. Just check from the chat, you get our link there. And then you can go and watch it as often as you want to watch. Okay. Any more questions? It's China Mobile. Okay. Good. So thank you all very much. Thank you, John. Thank you, Emmanuel. Thank you for your contributions. I can see Ego.
For each of the
Okay. So thank you all very much. I hope to see you guys again on the 6th of September. And I hope from there we can take it on from there and then we'll learn some more. Thank you all very much and have a great evening. Please remain safe and keep being safe. The Lord will be with all of us. We'll make more money from this market. See you guys and goodbye, everyone.